Hello. All right. Copy. Testing 1, 2. Hello. Hello. All right, can you hear me? Okay. Can you hear me? Sorry, guys. All right. I'm going to fix this right here. Tweet. Okay, super. Thanks, Neil. Ay. How did I make this stream? I did it off my phone yesterday. And when I looked in my YouTube manage schedule streams, it wasn't there. So my bad. All right, let me just warn people. Worries with stream. Here is the hot link. Gold, silver, fin twit. All right. Okay, let's do it. So many charts. When do you expect max fear, low risk reward? What do you expect max fear, low risk reward? Point for silver. Okay. The time and gold, same thing. Okay, where are we? Where are we? Okay, so I was working on a chart. Let's look at the gold chart first. Gold chart. I had it on the, let's look on the monthly chart. And let's just look at the bigger picture. How far are we away from the 12-month moving average? And that's going to give us a clue to how stretched we are and what are the potentials, the moves downwards. So let's just back it up. I don't know. I think I did it on, okay, right here. Let's remove the stock. Okay, here's my distance from the moving average. I'm going to put line. There you go, line. Change the colors, black. Okay, there we go. Remove this one and this one and this one. Okay. So here I have the gold chart. You could even see here, previous bull run, the 1 year moving average, pretty much well respected. See, it's hard to tell, but we went kind of far away. And then 1 month, 2 months, 3 months it took to touch that 1 year moving average, then start going back up. Your patience probably wearing thin. Let's zoom in here. But you see that correction. The correction of the 2001, when we start breaking out. Those are months. So right here we're stretched. A lot of people say, oh, to the moon, they're printing money, whatever, rates going to zero. And then the price action starts going down. 2 months, probably a lot of people that bought here on the breakout and then say, oh, it's the end of the world. But when it came close to that 1 year moving average, it supported it. So I'm not super familiar with the terminology like ICL or That's stuff for Grady and a whole bunch of, I think, Norvast and other guys are more used to those. But if I would do a low in an uptrend, for me, that's the moving average, the distance from the moving average. So right here, I'm just going to look at the distance from the moving average positive because we're in an uptrend. And I'm going to see, even here, I had fun with the Fibonacci lines right here. So here we see in that first segment before it really started inclining parabolic, before we got these full extensions. Every time this is a distance from the close, a monthly close from the 12-month moving average. It got to about, what's that number here? 3% away from that moving the 1-year moving average. Then it bounced. So these are good fear entries. You think it's the end of the world. Bull runs over. That's what you want to enter. And most people often they enter here when they're far away and they don't even look at the 12-month moving average. And they just they enter here. It's on a breakout. It's in the news. But once you're here, you're kind of in a you're trapped emotionally, because then you have to say you don't want it to go back down here. That scares you, and you're hoping for these type of situations here. But if you from here, if you go to a situation like that, then you're in parabolic mode, and then your emotion is going to be out of whack, and then you might not sell at the top. You're going to think it's going to go even higher, and then it crashes, and then you're below your entry point. You sell. It's like a vicious cycle over and over. So this is fine, but then this is where you want to enter, right here, where you know the pullbacks occur. Here's a higher level. Let me just finish that. I'll go at the questions. So here's for the other segment for the the second half of the bull run. It stayed even higher, so at 5.8% off the 12-month moving average. So you had the breakout, and here you have little pullback entries here, here. Those are entries that you could have added on. And the earlier you do it after a big base, the better it is, because the higher up, you never know when that last chance it's going to dip through, and then you're at the end of a bull era. But right now, we're just at the beginning. So a lot of people say, it's like 2011, we're close to the end. Well, we pretty much have bigger base that we ever had before, and it's getting stretched a little bit. So the first great fear entry is right here. See, it bounced pretty much respecting like 2010, 11 run. That was a great entry right here. Unfortunately, not the best entry. You're extended. So now you have to watch where the dust settles. So it could actually bounce. So for the ICL or whatever you want to call it, the distance where it could correct. Well, if the moving average right now is 1569, so 1659 times 1.06. So if it would pull back today, worst case scenario, I don't see a monthly close below 1758. And every month we go up, that moving average is catching up. So then you're going to add 6% above the 12-month moving average. And that's going to be your low watermark. And if you go sideways, the price action goes sideways, then that moving average climbs up, and you have a lower chance of going below that 12-month moving average. Because you don't want to go below, because it kind of invalidates, if you have a close below 12-month moving average, it invalidates the bull run, and you really have to reconsider it. But until then, right now, it's too early. I really want to see something like that. I want it to catch up. And remember, if it catches up here, we're going to be lower. If it really goes down fast, we're going to be close to 1750, 756. And the longer it takes to catch up to that 1-year moving average, the higher the price point is going to be. So you could even actually be 1800, 1825. Every month, that 12-month moving average is going to keep going up and up. Okay, so that's for gold. Wow, okay, let me check the chat. Okay, max fear. Okay, I'm going to do that for silver and try to... Okay, for miners, yeah, we could look at the miners right after we look at the metals. Any for differences in the price action between gold and silver miners? Will there be at the cheapest? Okay. Yeah, we'll try to cover the miners right after we do the metals. We want to make sure the metals are healthy at all times. That's your gold time. Gold, remember, that's what told us to go precious metals bull era. That's why silver, there's high probability chances that silver actually goes eventually to its all-time highs, just like gold did. Yeah, Ben O, intermediate cycle low, ICL, yeah. But that I'm not too familiar. I have to deep dive that. What does that mean? ICL, does it have to happen in 2 weeks, 3 weeks, 4 weeks? How does that work? Is it just on the daily chart? But ICL could be a higher low in a time frame, right? So you went high and then you go low, but that low could be a higher low, right? It could just be, this could be an ICL, this could be an ICL up here. So it's kind of I'm not too used to those that terminology. Okay, yeah, the recent tweet whereby you mentioned the Fed balance sheet and gold price. Zero hedge mentioned reaching 2020. In that case, yeah, okay. I have a great chart for the Fed balance sheet. I'm going to show it, and maybe we could refresh that also. Okay, let's go do silver first. Silver. I've never seen a 15% day yesterday. How much did it lose? That was insane. Platinum, yeah. Platinum, for me, it's like if silver is the poor man's gold, platinum will follow silver. So if silver really gets going, platinum is going to really overheat. And I think platinum is actually kind of resisted very well amidst the silver sell-off. I think platinum did pretty well yesterday. So we could do that. The metals, okay, we could finish with platinum. Then we'll go to the miners and that Fed chart. So look at silver. Silver right now, this is the distance from its 1 year moving average. And even if it went down 14% yesterday, it's still far away from, it's still 30-40% away from its moving average. And look at that. And silver gets closer to its 1 year moving average. So every time you choose a moving average, choose one based on past behavior, how well it supported it. And so you see silver right here, 1 year moving average. It even scared you sometimes. So you could even have a slightly longer time sample for 1 year moving average. Stayed above. It's pretty tight, so you got to respect it. Even here for that pullback in June, we got really close to it. So what I could do is, here's the lowest we got. So right here we bounced about 4% above the 1 year moving average. And if we really got momentum, you don't want silver to really go lower. It could a little bit, but when you're about 4% away from that 1 year moving average, you really have to consider entering. If all the other weight of evidence is still intact, and everything in the moving average still inclining, this is actually the best entry you could have. And where is it going to bring us? So let's say the moving average right now, it's 1836. So I have my calculator up. 1836 times, let's say 5%. So 1927. So right now, the extreme low watermark, I don't expect to close below 1927 or those regions. But each time moves on, that moving average is really starting to incline because the price action is really above it. And that 1927 low watermark is going to be 20, 21, really going to start climbing up fast. And just to go to a post, I said we could also correct with time. So right now we had a violent, let me see if I could get where's my pencil? Pen. Not here. Hey, where is it? Where's my coloring pen? Okay, here it is. So remember, people always, it's going to correct. It's going to go down straight away to that 12-month moving average. Well, it could do that, but it could also go down and then do a little move sideways, let the 12-month moving average catch up. And then people are less scared of these type of situations because it's a moving average that caught up, and then they're less afraid to enter here. Because even if it crashes down 12-month average right now, a lot of people are going to be way too scared. They're not going to enter. So there's the other compromise scenario where the price action moves slight ways or slightly downwards and catches the moving average a little higher up than 18, maybe 21, which would match also the 2016 highs, which is now support. And then after that, you have a good compromise, a good risk to reward entry right here, close to 21. And you also have the scenario where the price action just moves sideways and without really going deep inside, just buyers holding the price up, but not enough to go up above 27 or 29. And then you move sideways. And when the moving average catches up, This is really what you have to look at right here. This is not noise, it's a chart action. But if you want to know if you have a low risk entry, just wait. No matter what happens up here, when you're close to this line, you want to look for these type of bounces like here, here. Even if I could extend that, it did it here a few times. Here, great entry right here, here. You see it happens over and over. The closer you are to the 1 year moving average, the more scared you're going to be. Did I confuse myself? Yes, it's from Grady. Yeah, ICL. Okay, what's your view on the 3-year bond? Okay, yeah, that's super important also. 3-year bond. The real yields. We could do that. So let's do platinum. Let's go look at platinum. Let's see the damage on the platinum chart. Okay, here's 1 year moving average. You see, it's dipping below 0, so that's a consolidation phase. It's this bull right here. This is what silver and gold were. Gold a couple of years ago, silver what it just got out of right now. You could even have fun and draw trend lines on moving averages. Oh, let me get a line, black line. Sure, there you go. There's one right there. And when you break above that, it's coiling, and then that also could drive momentum up. Okay, let's remove all these charts. So what do I see right here? See, it was hitting that monthly defined trend line right here. Wick, price action, always wait for the close of the month. The sellers coming in, bring it below. But it's still above, getting squeezed with that 1 year moving average. It's above it. So that's the setup. That's when most people are scared. Most people are going to think, oh, platinum, it sucks. It's fighting right now to see if it's going to bust above. And if you combine that with the distance from moving average, these are kind of the entries that in the high weight of evidence area that really could take off. If I'm above the 12-month moving average, I'm going to look at a chart, especially if it's inclining. Is it starting to incline? Yeah, it's starting to incline. If it's below 12-month moving average, I'm just going to wait. I'm not going to bother with it. It's below the momentum. It needs to work some stuff out. Like right here, I had a close below 12-month moving average back in September 2011. Why would I look at the chart right now? You put on the back burner, but right now we're waking up. So the month is not over yet. There's still a couple of weeks left. Keep an eye on this trend line. See if you could close above. There's also a horizontal trend line right here. And if it's not done this month, then you're going to wait for September month and see where you close. But you're really close to exploding. And here you see platinum off the 2009 GFC, 2008, how it exploded up. And the bull run from 2001 all the way to 2008. Not many months that was red. And see it respected the 1 year moving average. 4, 5, 6 months, pullback, correct. That's kind of what we're happening now with gold and silver. It corrected with price action. Here, corrected with time. So corrected with price, hit that 12-month moving average, and then it just corrected more time, squeeze, and then exploded upwards. Parabolic correction below the 1 year moving average. That could have probably been an exit right here. And then after that, you would have had to enter a little higher up. You can't take a chance if you're below a 12-month moving average. It's really scary. If it's still inclining, you have momentum, but you're playing with fire. But I love it when it's just like this, a close the 12-month moving average above. I love these right there. What is a horizontal trend line? It's right here, this one here. So 975. I draw my my trend lines based on closes. So a white candle close or green candle close. So that it closed at 971. And then after that, you see that on smaller time frames, the price action got pushed down. So that's the ultimate go time right there. And I'm pretty sure if we have a close above this descending trend line, we're also going to have a close. The momentum is going to be strong. And we're going to have a close above the, I see even the descending trend line. 1 hit, 2 hits, 3 hits, right? We're above right now. And now actually we're fighting not with that descending trend line, but with that horizontal trend line right here. So a monthly close above here. So let's say we close a convincing close. $985, $990 for platinum. It's pretty much a go time for platinum. You got to give it a shot. But you got to expect that you'll be stretched a little bit from that 12-month average. Don't over leverage. Expect a pullback here. And then after that, you get a second entry right here. And usually within 1 to 3 months after a breakout, you get a pullback. So confirm the breakout. You could have initial position size here, pull back, and then after that, you could put a remainder of your position and then you ride it up. Some people, they like waiting for the pullback. You choose, but there will be pullbacks. But they could be higher up because the price action is going up, and then you correct, you let that moving average catch up. What is the horizontal line in the distance from the moving average for the silver chart? Yeah, for the silver chart, it was about 5% away from the 1 year moving average. You could start considering entering. And as I said, I thought it was like right now, if it really crashed, it'd bring us to about 1920, 1930. But I doubt we go there right now. You see, the price action would have to go all the way up, all the way down here for the pullback. So maybe a month, 2 months, I don't know. That's when you got to let it play out. But you know that when you're bouncing off this region here, that's when you're going to be in a low risk proposition to enter and ride up. And actually, these high points here, these are places to sell. See all these peaks? It's hard to tell because right now we're super close. Like right here back in 2004, we're extended just like we were here now, here a little bit more. So you look at it here and then you say, oh, maybe we could go a little higher, or maybe we could go even higher. But it's starting to slow down pretty much in the range that it did every single time. So expect this type of scenario, this type of correction. And then after that, you could enter when you get the better a better entry point. Rinse and repeat. All right. Unfortunately, yeah, when you enter 24, 25 on the way up, it's no man's land. It's tough, and you don't want to miss out. But at the same time, it's not the best entry, right? Because you always say, oh, what if it goes to 50 right away? Well, the odds are that it goes to 50 right away are low, and you probably don't want it to go right away to 50 in a rocket ship, because you're going to have these type of situations after. You want it slowly and surely. But silver, that's not, it's in DNA. It likes going parabolic every single time and just squeezing you up. Okay, platinum's good. Okay, let's do the Fed balance sheet. What did I do with the Fed balance sheet? Oh yeah, let's check it out. Fed balance sheet. Oh, silver bouncing up today. There's one more thing I could do with silver though. Silver is my contango analysis. Contango backwardation, silver. Remove drawings. Okay. So this little thing I look at, 1 hour chart. And this has been since we had this volatility in, let me zoom out. Okay, so this started pretty much end of March, before this March Madness stuff. And this is the premium over spot. So spot is XAUUSD, and I'm using the next contract in front future. So not the current contract in front, the one that everybody's trading, the SI1. I'm using the SI2. And that's because the SI1, since the futures always, like when they're released, they have a premium over spot. And that decays slowly. That time decay, the closer it gets to expiration or delivery date or first notice, it decays to reach the spot price. And when it expires, that's when the SI2 is promoted to SI1, it absorbs that premium. So the chart is more. SI2 always has the like the full premium or the full backwardation if there was any over spot. So it gives a clearer image, and you don't have to account for expiry date approaching. That's why the premium's going down. So every time things heat up, everybody wants silver, the premium goes up, I guess it's kind of sentiment, right? Everybody wants silver, so people are charging more over spot for futures delivery. And then we could use that to our advantage. So every time there's a reset in when premium starts to slow down, nobody wants silver. See right here, it's like 15 cents above spot. It's time to buy. If in the weight of evidence, you say, oh, look, I'm close to like that. I'm close to a trend line. I'm probably close to a moving average. Right there, bang. Fear entry. Here, look at that, resetting. Another, probably another trend line you could have drawn. Nice wedge or sideways move consolidation, letting moving average catch up. Bam. What was it? The low point here. 19 cents over spot, fear entry. Here, if you want to buy, let's say you want to buy silver, you say, oh, look, 68 cents over spot. That should be a big warning sign that it doesn't mean the price action can't go up higher, but that means a lot of people want it. If a lot of people want it, that means you're in an extreme. If you're in an extreme, then it's more delicate to, you're not at the best risk versus reward scenario right there. So often after that, see here, we're lucky it corrected not too low, but with time. But you're there, silver sucks, and there's a whole bunch of days here you might give up, and then after that you miss that big run up. So right now, this is the hourly chart. So right now here we're peak. You see, even if the started resetting, we still went up. So this technique is better for the fear when nobody wants silver. It's good to spot entries and low points, and not necessarily that it can go higher from a certain point. So right now we're starting to reset a lot. See, nobody wants silver. People are dumping it. Silver sucks. Classic. So now it's a question of weight of evidence. Doesn't mean silver is not going to go down some more. Here's my 1 hour. Is that trend line good here? Cool. Okay, so here's my long-term, 1 hour chart. Trend line, but you see it's resetting. So soon, I'm going to keep an eye on this when we're about 14, 15 cents. When we're at these low marks here, let's see where the dust settles on the price action. Is it going to stick around here above 24? We might get a good entry. If it doesn't, maybe a little lower here around 21, 22. And then this is going to be another confirmation in the weight of evidence that we have a good low risk entry. Nobody wants it. The premium's low. That's actually the good places to enter right now. And right now, you see it's at 21 cents. Oh, I keep moving. 21 cents over spot. So I think it could go down a little lower. But let's see how it resets over time. Okay, what else? You feel short-term correction, silver is over. I think it's still pending. So again, correction is just letting the moving average catch up to the price. And either the price like this, it just stagnates here sideways and volatile up and down. It doesn't mean it has to go down super low. It could just stay sideways, let that moving average catch up, let these trend lines catch up, let all the indicators reset, and then you're ready for another go. So now it's a question of time. We just have to, but how much time do we need to do that? It's kind of tough. Where's my other chart? Okay, I'm going to go to my weight of evidence chart. So here I have a tab, precious metals complex. All the charts I look at that are getting me clues on the health of the precious metals market. The VIX, wow, look at that, minus 7%. I love that. XAG, okay, the GSR going down, I like it. I like the Russell going up. I like USD CAD going down. I like the Chinese index green, tips, DXY going down. I love it. Even look, the USD versus the Swiss franc, that's a North Star classic. If Swiss franc is like the fiat currency, the golden fiat currency, if that could be the USD, we're in good shape. SIL, SILJ. Okay, miners. All right, where was I hitting with this? What was I talking about? I forget. Damn, so close, so close. All right, totally forgot. Sorry, guys. Miners. Oh, yeah, GDX. Okay, we could look at sugar. Yeah, sugar is great. Sugar. Did I put in my list here? Sugar. Yeah, I added it. Sugar is sweet. All right, that was a pun. And sugar, the best chart I have for sugar, look at that, it keeps grinding upwards. And that's why I wasn't scared yesterday, but it doesn't always happen the same day. When I saw the sell-off in, clear up. Oh no, it's right there. Cancel sugar. When I saw the sell-off in silver and gold yesterday, I came back to my sugar chart. And then I said, what the hell is happening with sugar? Because I know these two charts, sometimes I do charts, I forget. But this chart, for me, it's like a Bible or whatever. It's a wallpaper it. Point and figure. So point and figure, it reduces all noise. It's just price action. This is with gold. So silver even goes parabolic even more than silver when it goes crazy, but lockstep. Whatever makes sugar react, gold's reacting to it. Sink. See, sideways move. Sink, going up. And silver now is lagging. It usually lags gold. You can see it right here. See that basing pattern here? Bullish divergence. And gold actually broke up before silver. Gold's breaking up before sugar. So when sugar, I'm really anticipating sugar to confirm all this inflation possibility mayhem. Once it breaks out above this little bottom pattern here, bullish divergence, that is going to be go time. And then when I saw on the daily chart that sugar was still hanging in there, it wasn't like a deflation being priced in or anything like that. I saw the Russell was still hanging in there. I said, okay, we're still, it's not the end of the world. Here's with sugar with silver. It's going to show up soon for you guys. Same type of setup. Look at that, how it follows. Sugar is like as volatile as silver, sink on the way up, and right here silver is leading, and sugar eventually I believe is going to follow the same trend. The weight of it is building up. Remember, whenever I'm in doubt, gold beat its all-times high. It broke out. It completed that base, that arc. The miners, the gold miners, they went up. Silver eventually will go up and reach its highs. It's just a question of time. If you're not over leveraged and your position size correctly, you're gonna be able to ride this bull market longer. And then if you're over leveraged, then well, you're gonna have to trade in and out, swing trade. You're gonna want to see where these daily lows are, and then that's when the mayhem continues. Oh yeah, the Fed. Yeah, thanks, Ben. Whoa, sidetrack. Okay, let's go with the Fed. The Fed. Okay. Balance sheet. Let's see if that's a good search. Oh yeah, this one. Okay, what is this about? So the balance sheet right now, if it stagnates, that means silver will, okay, how did I have it, this chart? Okay, it's kind of an oscillator. So when you do ratios, and then if I could spot some trend lines like high watermarks where it refused to go higher and then low watermarks, I'm kind of using that ratio, that balance sheet versus silver as just like an oscillator, like a stock if it gets overbought and every time we hit that top rail, that means silver was outperforming the balance sheet. It had too much, so people were pricing in too much silver high versus what the balance sheet was, and then after that, it's the opposite. No, it's the bottom. Yeah, when it goes top rail, that means silver is undervalued. It has to start pricing in some crazy balance sheet expansion, monetary easing, and then when it goes down, that means okay, silver priced in whatever it needed to price in or too much, and after that resets. And right here, I'd have to redo this chart, right? Right here, that's why I say we have fuel to go down. So silver still hasn't fully priced the balance sheet up. Silver's there, okay, the balance sheet that has expanded by trillions. Silver's still around $18, $20 at that low here, or 15. Market's gonna have to eventually start pricing in this possible inflation, and that's what happened here. So until we go hit that lower rail, that's another weight of evidence chart that I use to see if I'm running out of fuel for the bull era. It was pretty good, this indicator, like 2011, 2008, or 9 tops, 2008 top, 2009 bottom. So you keep adding it on, doesn't mean it's going to keep working, but you got to keep an eye on that chart. Okay, JDX, we'll finish up with the miners, no problem. Entry point for silver gold miners coincide with, yes, I think, yeah, I did a chart, but let's do a fresh one. So let's do regular miners, JDX. Okay, let's do JDX. I'm going to do daily chart. And people, what they're looking at for timing is gold. Okay, let's do like that. Gold. What? Okay. That's not what I want. Okay, gold divided by JDX. And that's the classic chart. So just a ratio, you'll know which one's outperforming which one, like people are using for GSR. See here, gold in 2016 daily chart. So I have my 50-day moving average, 200-day moving average. Right here, when gold started underperforming, breaking down versus JDX, that was the precise moment right here, bearish cross, where you'd want to go long miners. And right, we had that, let me zoom in here. Whoa. There you go. Here we had the same type of signal back here of those March Madness, go long miners. And actually we're bouncing up. Look at that. Wow. So right now it looks like a bear market rally, lower highs within a downtrend, but we're above the 50-day moving average. Is it? I know it gapped down. So today we're actually smack on the 50-day moving average. But so you got to really keep an eye on that. Okay, that's a log chart. You don't want that to be a rising wedge. So you want to see if that's going to keep the pressure. Here's my 200-day. You want the 50-day going down, and you want this to keep going down like that. And if it breaks upwards, then you know that you don't want to be long miners versus gold. So I don't know if they're going to coincide exactly. I don't think they're going to coincide at the same day. But if there's strength in the precious metals market, you want both to be going up at the same time. Just you want the miners outperforming. You want that chart to keep going down, right? Because a ratio chart, it could go down. But the price action, gold and the miners, the price action could be going down even if the ratio is going down. It just means that gold is going down faster than the miners. So ratios is just to see which one outperforms the other one. But the trend, you have to go back to the real chart and see what the JDX chart looks like. We can even look at it, the JDX. 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 Okay. So I have some of my old 50-day moving average right here. You want that to hold. See here, you got scared, consolidated just a little bit below. 200-day moving average above. We're still in a vacuum right here. Hopefully that 50-day moving average is going to hold. That gap was closed right here. I'm going crazy for gaps. And right here, hopefully have a bounce and then continue upwards. That's what I want to see. There's always a chance that that 200-day that 50-day moving average fails, but I really don't want to go down here. See, in a healthy move, see you stay up above 50-day moving average. The more you go in the bull market, you gain velocity, and you should not be touching as often the 50-day moving average as when you're struggling to get out there. You want to stay afloat, and you really want to stay away from that 200-day moving average. You had the bullish cross here. You still have the vacuum there. So some people might do oh, look at all these lines. Jesus, Pat. Some people like to do a Fibonacci. There's so much stuff. So how would you do it? So here the move started here. Let me add 38, 51, 50. So now we pull back 50. So we did exactly the 50. We did a 50% retracement. We gap fill back here yesterday. And now we have to see if we're able to gap fill back up. And then after that, rocket upwards. Yeah, I know, scribbles everywhere. Okay, the real yields, before I get sidetracked too much. Where is my real yields? So it's still bullish. So when you take a step back, you look at the chart, you're still above 50-day moving average. The miners, the precious metals were extended. We had stretchy elastic, and now we have one awful day, big gap down, lots of volatility, and the technicals don't look as good. If I go on the weekly chart, I'm probably going to see a nice wick on top, the monthly chart. That means a lot of buyers came in. So those monthly, you want to see how that monthly candle close. It's going to close. You want to see the weekly, how it's going to close, because that's actual damage that was done, right? You don't want to see these big drops. I would have rathered like a sideways move like that, but you don't always get what you want. Okay, real yields. Real yields. Let's do it. Okay, so here I have the real yields. And this is a 30-year real yield. And that's a big driver for gold. I draw these lines. Why are you drawing lines? Okay, there we go. And then I drew these lines here, imagining a bounce off the 50-day moving average. Since we broke down, and this is probably another area where like everything's gonna align. Maybe the GSR is its correction is gonna stop. The DXY is gonna do a top there and it's gonna start reverting back downwards. If this busts upward above the 50-day moving average, I'm not gonna like it. So I'm gonna let this thing go up, and as soon as it starts turning back down, then we'll probably look at our other charts. The JDX probably gonna be bouncing off that trend line. The silver maybe got a little closer to that 1-year moving average and start turning upwards. So that's why you have to look at all these charts all the time. And then when all the levers are aligned, that's when you have a high probability of having a successful trade. Check out, let's say I add the inverse of gold. So this, look at that. Same thing. Gold, every time you had a close, oh, look at that going up. Gold bounces up to the day close or the day after. That's like something also I noticed because the real yields, I don't know why it's the U.S. Treasuries that they gives them out. I'm not quite sure how they calculate them. Maybe off the tip, the Treasury inflated, the protection Treasuries. But I've noticed sometimes that it's the yield. So you get the close, and the next day, if the close were awful, like real yields going up, then the next day silver, gold had a rough day. See the 30-year real yields refused to go lower, went higher. And after that, gold said, oh boy, got to price that in. So that is definitely a chart you want to keep an eye out for. So basically buying miners when they are nearest the 50-day moving average, it's good. It's a first step. So 50-day moving average in a healthy bull market, that's when you want to start looking at it. So let's say, the JDX is closest 50-day moving average. Okay. Then you look at the weight of evidence. You look at those real yields. Are they starting to turn back down? Are they starting to flatline? You look at the GSR, the DXY, the VIX. You look at all those, and if you see that they're not, they seem to be rolling over in the direction you want, then you could pull the trigger. So it's always in the total weight of evidence, because you remember one day you're going to be close to that 50-day moving average, but it's not going to support. It's just going to fall through, and then you're going to hit that 200-day moving average, etc. But if you get close to 50-day moving average, it's the first line of support where in a strong bull market, you should expect a bounce. It should bounce there. Zenden. Yeah, and I know, right? So the real yields seem to be what institutions are looking for to gauge the entry points on PMs. That's why sometimes I'm real yields, because gold, it costs money. There's lease rates, right, to own gold. So real yields, if the real yields keep going down, then gold's value should go up, right? You should be storing your money as gold, store that wealth, that value in gold, since the fiat currencies aren't giving you better yields, right? So yeah, so this is a big macro driver right now. It's not always the case. You got to make sure sometimes they get out of whack and they don't support. But right now, when I see behavior like this, look at that. The March Madness peaked up. And that's another little thing. What is the name of the indicator? Distance from moving average. I've been asked that a few times. It's a script. So let's say these are all the indicators I use. Distance from SMA. I don't want to see it. Okay, let me close that. Okay, let me close this one. I have a Pro subscription, but I don't have the Pro Plus Plus. So I can't have. Okay, here's the distance from the moving average. And I could give you the code. So you have to add a Pine script. So I create a script. Put in the chat here. And then is that gonna, can I send that? Send. All right, I click send, but it's not. Okay, it's too much. Oh, hold on. I have to send in 3 shots. Okay, there's 418 lines, and I can't send it all. But I think I put it on Twitter somewhere in my feed. Or send me an email, and I'll try to send it to you. Well, I have a limit, 200 character limit there for the chat. I don't know why. So that's the code that you need, and after that, I'll give you the distance. Okay, sidetracked. So that's why when I saw the damage done yesterday, I was worried about a market meltdown. So right away, I went to see the VIX. Because I believe the VIX yesterday, let's go look at the VIX candles. And the VIX, you see, actually yesterday, it spiked up. And I was kind of scared. So I'm keeping an eye on the VIX because I have my theory there that I want to gap close the VIX right here to 18.1. And the precious bulls market is not done until at least we hit that, or a good top in it. And then I saw the spike here and I said, okay, let's wait, because it spikes up, down. As long as the trend's going downwards for the VIX, I'm good. And see, today I'm very happy to see it minus 6% getting squished. Same thing here for the GVZ. That's volatility for gold. See if it's increasing. Getting in the danger zone, and then explode up. And then until we hit the March Madness, and that was probably one of the greatest buying entries for miners right here. But when it's up there, you think it's the end of the world, right? Because that's a fear barometer. And right now we're building something I'm not quite sure I like. So right here, it refused to go down. Kind of a bull flag out of above 50-day moving average, 200-day moving average. So I really want that to get smacked down. I really want this to go back down and follow what the VIX does. And it usually overlaps pretty much what the VIX is. So let's add overlay the VIX. And you'll see the GSR, the VIX, DXY. It's all the same. Look at that. So now I have the VIX and the gold volatility index, practically the same thing. So I'm expecting this actually as a sign of, I hope it's not a leading indicator that the VIX will shoot up. I don't know which one is confirming which one, but if this breaks down, I'm going to be happy. It's going to follow down the VIX, and then the gold miner is going to get some juice from here, right here. So this is a very important pattern I'm looking at. I'm happy to see it go down today. We'll see how it manages. My email, okay, the email I could put it. Bad charts at copying two. Yeah, I tried copying in 2 parts, but I failed. And then I went to look at the gold silver ratio. Whoa! All right. Remove drawings. Gold silver ratio, look at that peak, same thing. Gold silver ratio is almost like a volatility index. It's a health of the financial system. Same thing as the VIX. And it's trending downwards. 50-day moving average, 50-day moving average, 200-day moving average, bearish cross. So that's another one right here. It spiked up, and look at that. We even went all this. Oh, right here. Oh, Patrick. The lag is killing me. Right here. Okay, let's remove some VIX here. Okay. So the correction, I don't know when it's going to be done yet, whatever we're living through right here. But there is here some support, now turn resistance, what I call a wall. So there's a congestion area right here. So you see the price action try to go back up, and then sellers came in, bring the GSR down. So we got to really figure out, was this a bottom? And then we're really going to go up. Do we have enough juice to go through this little congestion area? And then after that, go test that 50-day moving average, that 200-day moving average. I don't want to see that. I know that 81 is also a monthly defined breakdown line. And I know that every time, if we close the month really below 81, my target's 47. So I don't know if you guys remember my PNF chart. I could go do it now. PNF. Reset. Reset. Okay. GC divided by silver futures equals, okay, this one, it has all the details. PNF chart, great to remove noise right here. Price action is down. So even if it goes up and down right here where we are right now, it's not warranting a reversal, a new column of X's. Okay, there's a lag right there. So we see we're still in the downtrend right here. And if the price action goes back enough, maybe above 81, then we're going to start getting rows of X's that are going to be added going up. It could happen, but I know that I'm aiming for every time that we close below that 81 level, we've always had a go at the 47-to-1 ratio. 47-to-1, the VIX going down to 18, the DXY going down. These for me are still elements I'm looking at for game on. If this closes upwards above 81 on a monthly basis close, I'm going to hold my breath. Something maybe more meaningful, more important corrections in the works. But looking at the daily charts, a lot of noise, a lot of volatility. You just go crazy. So being under position sized, especially right here on when the market hasn't really given a clear signal that it's going to go down here now, it's the best bet to be undersized. Here it's like whale hunting, right? When up here, then you know it's going to go back down, or you have high conviction, everybody's fearful, then you could have a higher position size here and scale out once you start hitting these important resistance support levels here. So buying here, really delicate. It could go back above 81, but if it stays below, then you're increasing your chances that indeed we might go to 47-to-1 ratio. And if that happens, silver is definitely going to go up. Most of the time when the GSR goes down, gold could stall or go up, but silver always outperforms and goes up. Thanks, Colin. Yes, I'll do another one. Yeah, North Star also 1800, Zenden. But if you check North Star, that's his arc. But I'm pretty sure he would agree that if the longer it takes to get to 1800, that 1-year moving average is going to go upwards, and we're going to have less and less chances of closing below 1800 on a monthly basis. So now it's a question of time. How long can we resist and let that moving average catch up to support us once we get to those levels, guys? All right. Hey, 54 minutes. That's great. None of my kids call me for a bathroom break. That's pretty awesome. Any other thing we could confirm? You guys want me to check? Or right now it's pretty volatile. I'd recommend definitely letting the week close. The Bollinger Bands are going to look a lot better. I could do that. That's another chart I looked at to see how stretched we were. Because when you look at the Bollinger Band, where's my Bollinger Band settings? Bollinger Bands. Candles. Let's remove the 64 period. Let's just go the 8. See, we closed barely above or above. So that was 1976, a Bollinger Band. We closed at 1985. And right now, resetting. See, I see this as a sigh of relief. Just getting that little bit of price action within the Bollinger Band, calming things down. You don't want to be too extended, like in August of 2019 when you needed many months to go to correct. Well, about 3 months need to correct back in 2019. But maybe expecting a month like this with this type of candle on the monthly chart for gold, for me, that'd be pretty much a success story in getting ready to close the next month solidly above 2000. Because if you close above 2000 now, it could still be good, but you don't want to close too high, right? You want to stay in the Bollinger Band, not to wake up too much of those, hey, you're overbought, I need to sell into you. So maybe there's room. I think there's room. The Bollinger Band's at 1243 right now. So if we could get a monthly close below 1243, I think that'd be very, very bullish for the continuation of this bull market. There's 2 weeks left. But you got to take that into a weight of evidence. People calling for ICL, corrections, letting the moving average catch up. That's why I say not everything's aligned perfectly to justify a strong continuation from now. Maybe a strong correction this week, and then after that, maybe on the smart time frames, let the reset indicators, and then we could close above 2000 once again. Michael, I was thinking that the closer we got to Q3 results, that would be the next time the miners take off. Q3, yeah, I don't know. Yeah, because they're going to have to start pricing in higher metal prices, right? Is that what you mean by Q3? Now they're going to have better profits, everything's going to look better, right? And that could also be an instigator. I don't have time. Like a lot of people, they check all the fundamentals and they kind of see that coming. So Q3 is what it ends in July, August. So it's the September close, right? And then after that, we'd have a strong October, November, December, or October. Yeah, why not? So more correction, and then Q3 results through the roof, or we start pricing in that a little bit ahead of time. SE, but the target of 47, yeah, it's gonna look great, right, Michael? So that's why, like, the big picture, we're just starting, like, it started actually here, but then after, like, we're still, if I look at the other currencies there, check it out, XAG, my countries, I see the target of 47 for GSR. Were you expecting that next year? Yeah, I don't know. I don't know how fast it's going to reach that 47. But it's just to give me that there's juice, there's energy to go down, there's energy. We're not at the end of a bull era. So if I'd see the GSR at 47, I'd start worrying that we might run out of juice. But when I see the GSR that's at 81 or 79, it's like my fuel tank. That's the way I see it. There you go, September. Yeah, more money. So maybe things are aligning for a correction in August, and then after that, start expanding in September. See, in Canadian dollars, we broke out of our highs, all-time highs, back here, man. And look at that, consolidated above. So this could be the same thing happening now for the US dollar. Had a whole bunch of scenarios, broke out, and now this could be happening for the US Gold Express in US dollars right here. Broke out, and after that consolidation, and then explode. See, it went out of the Bollinger Band, time to cool down. Go up, sellers coming in, keeping it within the bands. Now it's consolidating. So yeah, sure, why not maybe a little white candle lower here, and after that we keep going up. It's an uptrend. It's never in a straight line. Look at that, 3, 1, 2, 3, 3, 1, 2, 3. It's see this as an opportunity. So emotionally, if you're scared or whatever, when you see a nice red candle like that in an uptrend, see that, okay, I might get my entry. I might get a better risk to reward entry. Big Marabuzoo candle, buying at the top here, super scary, because where do you want to go from there? you're hoping for the exceptional, where the exceptional doesn't happen often. You have to wait for these type of scenarios here, right there. So that's what I am looking at. Did I get sidetracked again? Don't know. Maybe. All right. What else, guys? Want me to look at something else before we call it quits? So yeah, let the week pass and reduce noise. And after that, I take a step back. But for me, everything's still intact. We're just living these type of moments right here where we're healing from these impressive moves that we've had. Look at that. Look how many months. White. 1, 2, 3, 4, 5, 6, 7. And even intra month here, you'd be scared. Look at that wick going all the way down here. Oh, it's the end of the world. But look where it closed. And now we're just August 12th. You got to really let this thing play out right here. See where it does close. Oh, Bitcoin. I could do Bitcoin. BTC. I started looking at Bitcoin for its ratio to the Ethereum. And look at that. Not bad. Within its band. Going up. Not overbought. Nothing to scare anybody. See, when it went too far out of the Bollinger Band, got sold into. Went too far out, got sold into. And now this is super healthy for... it's a beautiful pattern. It's very analogous to the gold chart. Highs, the lows, and now preparing to go up to these all-time highs. And that's the yearly all-time highs for Bitcoin. It's 1386. So people think sometimes, oh, 20,000, or like silver for 48 or 50. It's not that. This is the important yearly close. I don't know if you're gonna get it this year. I would probably hope not, because it feels kind of stretched, and you'd have to take a hit like that. But look, you have a yearly, monthly. This is monthly defined breakout. Actually, you have a confirmed breakout in July right here. Look at that. You just broke out. Monthly defined breakout here was 10,761. Confirmed above, noise below, but you're still hogging above. So this thing is just waiting to probably touch in the next few months. There is gonna go touch that 13,000 for sure. That's it. That's where it goes. Gonna go up like that. Now you have support at 10,000, monthly defined support. You see those buyers come in. Yeah, so it's looking good. I have nothing against cryptos. Stock ticker is a stock ticker. And I want everything to go up. Honestly, if precious metals are to go up, I think you want everything to go up. It's not a fight. They're printing, debasing your fiat currency, and you have to protect your wealth by... you need more and more fiat. So you need to go in instruments where the fiat... where you get more fiats coming in there. You have to multiply your little baby fiats because they're debasing them, and you have to fight against that. Copper pick. Yeah, I have copper stuff. Sneaky French spy. Yeah, copper. Copper is let me pop that out. OCO. Do they just do copper or OCO, or they do other stuff? Oh, look at this guy. The beast has awoken. See, look at that. Bollinger Band, monthly chart, big warning sign. Solid close, solid buyers. Here, a lot of people hoping for the moon. Unfortunately, odds are that will not continue. Correction. And then, I don't like that. Reduce that. There you go. And here you had a nice... Yeah, it looks pretty good. Here you had an arc. Start going upwards. Close. So in June, you had a confirmed breakout in June right there. Monthly chart confirmed breakout. Then you continued above monthly defined all-time highs. Strong candle. And right now, you're hogging that upper Bollinger Band. And that's what you want. You don't want to go too much above because you're going to take a hit. Eventually, those wicks, they hurt you. They don't look too good technically. And that's what you want to see. Keeps going up and up. But if I put that with a distance from moving average, not super duper, because you're probably far away. So for entry right now, it stayed strong. Yeah. Look at Are you? Well, you're not that far from the, you see the stock on the monthly chart? I call that the power zone when you're here. You're just approaching the power zone, and you could stay a long time in the power zone. So the stock, you want it overbought on the monthly chart. It's not, you don't, when it goes in, it stays in. You see, you get good momentum. Sure, you have a multi-month consolidation here, but after that, resolved upwards, up on the 12-month moving average. So right now, you're starting to get a little stretched from that moving average. See right here when it stretched above this distance here, 90% away from the 12-month average, it needed to heal. So the best entry was June, when everybody got scared and you did below that 200-day moving average, which was still, no, that 3-year moving average, which was still inclining. That was a great fear entry right there. But this type of thing is a strong possibility. That's one scenario, and the other scenario is you just keep going up and up. But you got to play the odds. I'd rather healing here, adding on, and then going up here. You don't want to kill the market. But you see here, it stayed pretty much in that range, that distance for a while. So there's still some room. I see some room up based on previous behavior. So that's a nice one. Oh, AG. No, it did not do AG, Michael. Which Bollinger Band? Well, I use the 8 BB on the monthly chart, but you could have fun with any of them. The 8 BB, it reduces a lot of those monthly candles out. Yeah, let's go to do First Majestic, because that First Majestic is going to be sweet. Ooh, monthly chart. Okay, let's look at that. Here is it went above my volume defined support, resistance. So all this congestion area, I'm going to put a line about here. So below, we were here, we got squeezed up. Here's a vacuum. This now is volume defined support. It used to be resistance. We're above an inclining 1-year moving average, above an inclining 3-year moving average. We broke out. Even above here, monthly defined breakout right here. Now we're below. I don't know if we're going to close the month. I wouldn't be surprised to see a wick go down and a close above the month, above this candle here. A close above 1225, 1226 there. I would not be surprised that First Majestic would go above that. What is it now? 1144? Yeah. And that'd be very bullish if we could close above right here there. That'd be probably a great go time. Look at that moving average. Nobody wants First Majestic. Miners suck. Sorry about the language. But look at that tightening, coiling, getting close to that 12-month average. Man, this is actually getting a great entry right here. Really getting close. Stock about, if it could break above this trend line right here, go in overbought territory, you could get these type of explosive scenarios right there. So this actually stalling could actually provide a great risk to reward entry. You have to have trust in this that's going to support you. All the hard work's been done. A lot of people changing hands here. All the weak hands, they sold. New guys bought in, all here. That's what the consolidation period's for. And right now, this could actually provide a great entry. Thanks for bringing it up. There's too many charts, man. It's like you look one side and then you get confused. And then you miss out. Oh, look at this one. It was perfect. It was setting up. Then I went to something else. So this is very, very healthy. As long as we're above here, above this huge base there, we're good. Yeah, just did it Nerf Funk. So we just did the First Majestic. That's what we're doing right now. So it's actually looking pretty good. Wait for the month close. And if it really closes above that line, just a little higher, then that's probably a great entry to enter. Just like you see previously, you have some strong pullbacks. Even here. Could I draw my trend line like this? Oh, even here was close. Breakout above, had the wick below, and then it closed above. And look what happened after the next month. So everybody got scared, but you were actually above an inclining 12-month moving average. The price action was getting close to the 12-month moving average, just like it's happening here. And after that, it just exploded. So don't give up on AG. And remember, AG is 10% of SILJ. I think it's 5% of SIL. And a lot of these charts are going to look alike. They're going to have the same type of setups. So this is actually a great pullback to a breakout line, which happens usually 1 to 3 months after. And people are just scared. They don't jump in. But the weight of evidence, for me, it's still supporting an uptrend. Here, you see it's dangerous. Super far away from the 12-month moving average. Every time I look at a chart, you have to see these limits. Always see based on past behavior. So even you see here in 2016, super stretched. And previously, it barely did these levels and it stalled. So you got to respect how the chart behaves. So when you got here, it's greed getting in. Greed, a lot of greed. I could go to the moon. But you see that it's very tough to get above that. And people are afraid to sell here because they bought high and they want more profits. But if you bought right, for me, buying right is right here. If you bought right, when you get here, since you loaded up here, you're not scared to take some profits off. You're not as greedy. You don't feel the need to hold on to have a 2-bagger, 3-bagger. So this is type of entry that's being created right now for AG. And every time I look at a chart, that's what I look at, distance from the 1-year moving average. And then if I have these type of setups, these are actually great buying entries. So wait for the end of the month, make sure the whole chart doesn't fall apart like here. See in March Madness, it fell apart. You don't want that. But if it closes above, that's a good signal that you're setting up for a nice stretch. And you'll see it when everybody starts talking AG and silver miners, or it's going to 100. We're probably going to be this stretched away from the 12-month moving average. PAAS, Hecla. Yeah, let's do it. I love the silver charts. Who has PAAS? Okay, let's do PAAS first. Not PAAS, PAAS. Canadian or American? Okay, we'll do American. Okay. See, it's correcting. All right, let's back it up. There you go. PAAS. Pretty sweet. Okay, hits closer to its all-time highs here. I'll put resistance on my distance from my 12-month moving average. See, got close, and then started slowing down. So that's actually a pretty good sign. Be patient. Let me put my lines. Here, put a tip. So here, the stock, I put, really, if it touches that line, that's like that 96.09, that's like the high watermark. It has to go down, or it doesn't have to, but needs to reset a little bit. So you see when you touched it, right here, it started going back down. But it goes down, but it's going to stay high. So in the bull market, it's going to go down, but you're going to spend a lot of periods in that overbought territory. Kind of in the no man's land right now, the distance from the 12-month moving average. So it's still catching up. So if we close the month here, we're going to be more catched up, creating a better low risk, higher reward entry right here, not stretched here where you just have a, because if you buy here, we're at 66% away from the 12-month average. And you know that the high watermark historically was 81. So that's how much gain you could get. But if you're down here, close to 3, 4, 5% off the 1-year moving average, and you know that you could go up to 81 or 81 away, that's like 75%, 76% possible gains before you're too stretched, before meaningful pullback. So right away doing that math, that's how you could establish another way to establish risk to reward entries. But the chart's good. Look at that. Look at that volume defined base. Right here, you saw that the best entry was around here. Even after that March Madness, when we close above that huge volume storm right there. And then you see we're starting to slide up. And now it's morphing into a bigger pattern. And that pattern has a measured move of, drum roll, so many techniques. People do cycles. That's why I never judge anybody's system. Absorb any of them, see what fits for you, and then as long as you respect your trading framework. So this is the big base, and this is actually the long-term goal, $80 for PAAS. That is what we're driving at. But to hold on, every time there's a pullback like this, a lot of people are going to try to trade in and out. It's mayhem. But after that, if you look at the long term, you missed out on a nice run. So don't over lever up, and you'll be able to sustain always. you have to be able, when you position size, let's say you decide, okay, I have to get in here. I don't want to miss the boat in case it goes up. Well, at least make sure your position size, if ever the price goes down to the 1-year moving average, you're not wiped out. At least that as a minimum. Because the oversize here, you won't be able to sleep at night. Oh, and then right here you get a margin called, and so you got to make sure you're able to survive at least the 12-month moving average. If it dropped right away, can I survive that? That's like a minimum. Because over time, even here, see, PAAS, it respected more the 3-year moving average. So you could always do that, adapt your moving average to fit the chart, how it behaves. And even here, see, it went below, but the 3-year moving average, it loved it, respected it all the way up. So right now we're going up, we're above. So PAAS is looking pretty sweet. And actually gonna probably get a great risk reward entry right there in a little while. Every time I look at a chart, I see new stuff. This is the worst type of pullback right here, back to 23. Not sure that's gonna happen. Here's a volume node, maybe a little higher. It could happen, but if ever it gets down to here, we're gonna be very close to that 12-month moving average, and that's gonna be a great entry right there around this area. What about, okay, let's do Hecla and close it, because if the video's too long, I'm not sure that I'm going to watch it in a non-streamed way. Hecla, wow, okay. Hecla is, it's weird because it had some good phases, but it's not like super see, it keeps going down and down over the years. So it has some bursts, but it seems to lose steam. You know, it's not like it doesn't look like the silver chart or the gold chart closing in on all-time highs. Look at that, Hecla. You have data all the way back to 69. So right away, I could put distance from, and even here, you see, we're close to that distance from the 12-month moving average. So not a great time to enter. You're hitting some monthly defined resistance. So there's a whole bunch of, so that's kind of slowing it down right now. This area right here, it's stretched. You have a bullish cross on the 1-year and the 3-year. It's perfect. You're starting to enter the bull zone, which is good, but you could retrace within the bull zone. I just love to see that. And where's my low water mark? So I'd love to see that at least go back down, let the moving average catch up, and see 95% away, at least maybe back 40% close away. And then after that, get maybe a better entry right around here. Yeah, there's a lot of volume here. That's going to become resistance. But if it comes down, hit that volume node here, entry here, 1-year moving average going up, 3-year moving average going up, and then consolidate here, and then you'll be ready for the next leg out of this pattern. With the target of, drum roll, let's remove the log chart. Ah, Pat. Lag. And just a pattern, just a chart target just off this, I'm not going to go greedy, just off the small base. Add it to breakout line right here. So you got to target around 12, 1150, 12, bring it back to these highs right here. So for Hecla, that is the deal. Hecla. All right, guys, this has been a nice long live stream, and it helps me. That's homework I do myself, so might as well share it with you guys while I do it. And that'll be saved on the YouTube channel, and as time progresses, I'll do more, guys. Thanks for watching. Ciao, guys. Thank you.